Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap. This is our session that we do every morning pre-market to go over our trade plan and set up our trade levels and our targets for the day. We start with a basic macro to micro view of the trends, then where we are within the structure of the market, and then we drill down to the micro and pick out our levels. My name is Doug McKay. I'm the founder of Quantum Leap Futures. If you want to find out more information about us, please send me an email at quantumleapfutures@gmail.com or contact me 647-545-8065, and please follow me on Twitter at Crazy2. If you want to see more videos, do a search on YouTube for Quantum Leap Futures. Before we get going, I just need to get the disclaimer done. This information is for the purpose of educating members who want to expand the knowledge of the business of trading. It's not for trading or investment advice. Only you are responsible for the trades or investment decisions made. Trading futures or any instrument involves risk loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used. When trading futures or options, investors could lose more than initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and the trades that see in Quantum Leap are for education purposes only. Please trade your own plan and your own risk metrics. Okay, let's get the news done right away. We had core retail sales month over month in Empire State Manufacturing. Basically, they were a big miss on all three. Really didn't affect the market much. In fact, we're actually trading right now higher than where we were. I think a lot of this news is already factored in, and really the big news that everybody's waiting for is going to be the Fed this week. It's going to be a big Fed meeting this week because of the fact that so many people are anticipating for the Fed to raise rates in September, and this would be the one that they would do it. Plus, they're doing it on Thursday versus Wednesday. So it's going to be a bumpy ride into this week. We're actually trading pretty tight. The RTH session yesterday was the tightest session that we've had in quite some time at 16 points. Now you would think, well, geez, 16 points, that's a pretty normal range, but with our average true range running close to 50 points right now, it's actually really small. And overnight, we had a range so far of 13 3/4. So again, everything's sort of tightened up. At 9:15 Eastern Time, we have capacity utilization and industrial production. Then at 9:30, Great Britain CV leading index, and then 10 o'clock we got business inventories. Pretty muted news. The big news was the retail sales, and it didn't really move the market much. So one thing I like to do, and let's start each morning with a basic chart and taking a look at where we are within the trends in the different time frames. I use a basic candlestick chart with a 9 EMA, 20 SMA. That's the two EMAs that are the two moving averages that I use, and I'm simply looking for slope and separation and where we violated the trend or tested the trend, and then I'm also looking for naked crosses. Naked crosses is a study that I follow for targets. On the monthly, we've had this wonderful move up, and now we've had the first challenge, and we are below the 9 and the 20, so we are challenging the trend on the monthly basis. On the weekly, we have a slope and separation to the downside. We created this reversal pattern, FUBAR, Mr. Sneaky, tech gap. We haven't closed the tech gap. We've come close. Right now we have an inside bar forming for this week, but it's still pretty early. I've got some other lines on the chart here from a smaller time frame, so they're just going to be a little bit in the way. But the trend overall on the weekly is down. On the daily, same thing. We had the FUBAR, Mr. Sneaky tech gap, closed the tech gap, then we've rejected the 9 and the 20 so far, and we're coming in where the two MAs are coming together. I call that an MA hug. Or squeeze, whatever you want. So we had a pretty strong trend coming down. We're now into this consolidation pattern, and doesn't mean the trend is over. We can reject this, but if we close above it and start moving up, we could see the start of an upward trend. Going down to the intraday, into the 4 hour, we've been watching this channel on the 4 hour right here, which has been a downward channel. There's also a symmetrical triangle that I'm watching here. I'm really watching for a breakout today above the 1950 area or below the 35 area. Until then, we're still in this downward channel and holding a trend line. If we break the trend line, then I'm looking for a move down into the 1915, 1912 area. But until we break, we're just consolidating. I think it's still going to be pretty tight and rotational today through to Thursday. But you never know what's going to happen. The overall trend on the 4 hour is consolidation. There is no trend. Going down to the 30-minute, same thing. There's no real trend. We are trading above the 9 and the 20 though. So we could get a start of a upward trend. Excuse me for a second. Battling this cough and I'm about to lose my voice. On the 15-minute, we do have some slope and separation to the upside. We just closed out a technical gap, but we've held the 9. We do have a naked cross down here at 1941.25. Mark that in your journal. But so far right now, we've got a bit of an upward trend on the 15-minute. And then on the 5-minute, we've had this upside trend, but now it's been challenged and we're going sideways and sideways consolidation. So no real trend coming in on the 5-minute. Taking a look at the overall structure, nothing really has changed so far. Let me bring in yesterday's volume. So yesterday we were watching the smaller 5-day micro composite because it was the micro composite VPOC was down here at 1940, 1939.75 thereabouts, and we were waiting to see if it shifted up, and it did shift up to the 1943. But the bigger picture is this micro composite that I started with the significant breakout candle, and the value area high is up at 76.75. The value area low is down at 1906.25, and we've just been trading inside of this. Lots of gap, lots of undetermined fair value, very tough trading, and I think it's challenged everybody. From new traders to very sophisticated and seasoned traders, and nothing's changed. Right now we're inside of this value area and chopping around. There's a lot of undetermined fair value. As long as we're inside of this, we really have a tough trading zone. And what's compounding it is the fact that we're tightening up, and now we're trading in this tight range between the 48.75 and the 40 area, with a couple breakdowns to the upside, a couple breaks to the upside, but really finding some balance coming into the Fed in around this 1943. Currently trading 46.50. First key level for today is going to be the 48.75. I'd really be watching the Globex high, which is at 49.50. A break above that will give us at least a move, I think, to the 51, the value area high of this 4-day micro composite. Above that, looking for continuation up to 55. Possible responsive selling at 57, but really targeting this 1960, 1961.75. 1961.75 is the most traded price since we had the significant breakout candle. So value is still left above us, and if we get out of this tighter range and get out of value and get into price discovery, we're likely to come up and test the 61.75 to see if we can find some sellers up there. As long as we stay below the 49.50 and stay below this 48.75, then I think we're going to see rotation back towards this 43 again, possibly test this 40.50. And then once we get below 40.50, we really don't have a lot down there, until we get down to this 31.75. 34, 35 area would be my first target below, and then down here to the 31, and possibly even test the value area low here at 30. Below 29.50, then I think we're going to come down and test the range low of this 5-day microcomposite, but I'm really targeting the 23 and 22 area. We've got a naked close here at 21.75. There's a naked VPOC. You've got the former microcomposite VPOC at 23.75, where we found value down here before at 22, and then the big target below is going to be down here at that naked VPOC at 19.20, and possibly a test of the longer term microcomposite value area low down here at 19.06 and a quarter. So let's take a look at what we've got overnight. So far, our overnight high is 49.50. Now we're trading 47.75, and we still have 35 minutes thereabouts. So if we keep challenging this high, we could put in a new overnight high. But right now, our overnight low doesn't look like it's going to be challenged. It's going to be all the way down here at 35 and a quarter. Our overnight VPOC is not likely to shift either. It's at 45. I'll put in the overnight high right now at 49.50. Just someone keep an eye on it while I'm talking to tell me if we actually go up and put in a new high. I'm pretty sure we're going to come in and put a new high. This is pretty thin trading up here. And here we are coming up there right now and testing the developing value area high from overnight at 49. There's an LVN right here at 41. Problem is this whole area between 43 and 40, really all the way down to the 39, is going to be very, very tough to enter any trades there, because there's just, you can take a look at the shape of this profile here, and this is just ugliness. This is like a box, and we just chopped around there all afternoon, and there was just really no good trading opportunities. I think my last trade was around noon, and I didn't trade after that. And we are rejecting so far the 49 developing value area high, but we'll just keep an eye on that. So how do we trade this? This is a tough one because of the fact that we have all these tough areas of undetermined fair value. Personally, I'm going to use the 48.75. But I'm only going to use it to the short side right now. I'm not going to use it to the upside. I'm really going to wait until we get above this 51, okay, to go and challenge the range high from yesterday. So I'm going to be using 51 as a breakout trade for a move to test the range high at 52.50. If it'll let me put it in. And above that, if we get above the 52.50 and we're out of range and out of value, my main target above is going to be the 55. Come on. And then there's like I said, there's really not much up there until you get up into the 57 CLVN. And then if we get above the 57, I'm targeting the 61.75 as the next big target above. You've got the naked VPOC here at 60 and a quarter, the CHVN at 60, but I'm going to be targeting the 61.75. And then above that, there's the 68.50. And then 70.25 as a target. And then the next big level and the next key line in the sand, you've got the CLVN at 75.50, but I'm going to be using the value area high of the microcomposite. So 76.75. Can't type today. Okay, and then once we're above there and we're back clearly into price discovery, there's not a lot. This is a big blunt area above us, and I'd be targeting the naked close at 79. You've got a little bit of resistance up here at 88.25. And the naked VPOC below it. And then the big target is going to be the 95.25. This is the 50% of the significant breakout candle. I always watch these. And then, of course, above that is the big target, which is up here at 99.25. This is, of course, the measured move that we're watching, but more importantly, it's the 61.8% retracement of this whole move down into that 1831 area. And then above that, you've got 2,000 and 250. These numbers you'll all recognize. I don't know why my system continues to do this. They're not supposed to keep reverting to my new. Gonna have to figure out that. And then above 250, we've got 475, and then the big one, a little bit of resistance at the 08 area. It's 0875, and then the big one is going to be the 1150. I don't think we're going to get much higher than that. Our 20-day ATR target to the upside right now is 1985.50. So right near that 85.75 naked VPOC, but I'll be surprised if we get there, but you never can tell. All right, so below 48.75. The target has to be that 43, because that 43 is the most accepted price in the last 5 days. So our main target inside of range and inside of value is going to be this 43. It also happens to be right at our close. Our naked close is going to be 1943.25. And, don't forget the naked close. Now, if you're looking for a place to add on, below this 48.75, your first target should be the overnight value. I forget what the percentage is, but I know that there's a high percentage of coming down and testing this value from above. And then you've got the value area high here at 44. It's going to be a little bit tight, but it's, I think you could add on to a short there to get down into that 43 with a possibility of coming down and testing the value area or the VWAP from yesterday at 42. And then below that, again, this whole area between 43 and 40 is going to be really tough because we've got double distribution here in the microcomposite VPOC from the last 5 days. The HVN, the microcomposite HVN in the VPOC is 43, but it could shift very quickly back down to 40. And you get this double distribution as well in yesterday's profile. It's not real clean because it's pretty blunt and toothy, but I would be looking for continuation. And if you want, you could take another add-on below 41.75 into the VPOC at 40.50. And if we get in here and we chop around in here for any time, look for the possibility of the 80% value area play coming down here into 39. And then below 39, that's where I think things get interesting to the downside, and I'd be targeting obviously the range low at 36, but I'd really be watching this 35 below us, which is the overnight overnight low. And then below that, the next level is going to be the 30, which is the microcomposite value area low, but I'd be using the 29.50 as another trade area. And if we get below 29.50, then I think you got a really good shot of coming down and testing this 25 would be my next target. That's the range low on this microcomposite. 25 even or 25.50? 25 even. And down here, if we're below 29.50, don't even think about getting long, because they're going to have to come. We got a lot of unfinished business in this 23 and 21.75 area. 25, 23, and 21.75 is a key area for us down here. So don't even think about getting long if we break 29.50 until we come down into the 23, 21, 22 area. Big area. And then below that, you've got the 18.75. And then the first area I'd be looking for support is just under that at the 17.50. But if we break the 17.50, it's all going to be about this 19.12. And more importantly, the next key line in the sand below, which is going to be this 19.0650 or quarter. Because if we break that, then we're going into the 1800s. Come on, type. And then below that, you've got nothing until you get to the 1899.75. which is our ATR target to the downside. And then 98.75 is going to be where your next possible support for responsive buyers. We'll come down here, dip into the 1800s, test the 98.75, and then probably bounce back up into the 1900s. I don't think we're going to hold, okay, with the bounce back to 1900s. I think they're going to bounce, then they come back and they're going to flush through this. And the next big target below there is the 94.50. And then 84.50 for some support. And then the big one was 87 in the September contract, but has been shifted down in the December contract to 1877.75. And this is going to be a very big psychological number to hold. Because if we get below that, then I really think we're going to get a bigger move down. This gets pretty thin down here, and I'm looking for a bigger move down into the 1832 to 1821.75 area. I don't think we're going to get down there today. I think we got most of our range covered for today. Have we put in a new overnight high? Let's just take a look at that. Yes, we have. We've gone up to 52. So basically came up and almost challenged the range high. You can see how thin this area is. Trading 49.75 now. We still have time to expand out further. So be careful. We're going to open outside of range. I'm sorry, outside of value, but inside a range. So my main hypothesis right now is if we hold this 48.75, and you can actually bring this down to incorporate 47.75 LVN. If we hold above here on the open, look for them to come up and test the overnight high and the range high at 52, and if they break out from there, I'll move up into our main target above at 55. If they come down and they do not hold this 48.75 or we're open up below there, look for them to test it from below or test it from above. But if it doesn't hold or they reject it from below, then look for us to rotate back down into the 43 area. I don't think we're getting away from it that quickly. But I'm expecting a rotational day and really thinking that we could actually trade within a pretty tight range today between this 40, 50 and this 61.75 area. If we get any expansion, basically, from microcomposite VPOC to microcomposite VPOC. But if we get below 40, 50, then I think we'll get a move down, and we're going to get stuck in this area down here. So my main hypothesis is rotation with a test of both the 43.40 area and possibly up into the 61, 60.50 area. But if we get below the 40 area, the 39, what did I say we was going to use, 39 area, which is the value area low, then I think we get a rotational day and we get stuck down here in this distribution zone that has a lot of undetermined fair value. Taking a look at the Renko with Keltner, currently right now our Keltner center line is 46.25. Our upper Keltner is 52.50. There's our range high from the prior day is in range right now within the Keltner. Below the 46.25, you've got the 45 overnight VPOC and 44 the overnight VWAP, and then of course the lower Keltner will be a test of that 40.25 area. Going to be rotational, be tight, pick your, stick to your plan. Like yesterday I said, this whole week, my whole goal this week is to trade my plan and not try to push trades. And less trades is going to equate to better trades this week. So if it doesn't fit within all of your trade rules, don't take it. Out is a position right now. Taking a look at gold. Gold is simply consolidating in around the 1106, 1105 area. Again, the big key break is going to be below 1100 for a move down to test the range low, but I'm really looking for them to come down into this 1091 area with 1095.30 as the first major target. It's going to be choppy in there. Really can't take an upside trade until we break out above the CLVN and the value area high at 13 and 1270. And I think it's going to be a muted move up into the 1650. Again, I'm thinking that gold is going to stay in a tight range until we get to the Fed. I think everything is going to be all about the Fed this week. Anyway, that's going to be it for the pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.